I'd say the one thing that the government's good at is being responsible, making sure that they always have a DD, and in this case, it would be designated distraction.
Yeah, for sure.
So looking forward to that. So outside of the crypto side, so we've also done some reports on the debt ceiling last week, and then following on from that, there's been some movement in the news, and now there's a report by Pepe and Obrizi on the resolution for the debt ceiling. Alongside that, we also have GeForce going through the S&P options. So it's going to go through the report and then how that relates to the actual markets, whether it's impacted it, how it's impacted it, and how we should sort of bear the FA with the TA and all around in one. So over to you guys.
Thanks, G. Yep. So this week, Obrizi and I, we kind of just summarize information in another bit. So this is the last of a three-part series. The bill has been signed by Biden, and I kind of went over it a little bit last week, but I really want to drill this into people's, investment and trading mind that this current issue it's really just a temporary measure, and the issue is it's really just a kick the can down the road scenario repeated, right? So I would say it wouldn't be as big of a problem if this wasn't the government's modus operandi, I guess we could say, right? Like their current method of working and solving problems, but it's becoming and has become an ongoing trend. And what I mean by that is, you look back, and I think I shared this last week, but I'll share it again. If we look back to 2021, so this is from October 2021, is when it was published, and we could see that the national debt at the time was 28.4 trillion, and the debt ceiling was permitted to rise to 28.8 trillion. Okay, and we still have the same character, Janet Yellen, saying that failure to sign the bill would result in economic calamity by August 18th, right? So again, 11th hour, or how do we say it, like 2 minutes to midnight type situation, where they fix it in the short term, right? And the fix is that they just increase the debt ceiling temporarily and fix the budget temporarily. But the real problem here is that it got kicked down the road till 2023, which is obviously this year when the new one was signed. So if we look at this, right, from the GDP, the gross domestic product perspective, in 2021, it's very clear that there's a massive spike in terms of real GDP as compared to if we're looking forward after 2021, right? And so these quarters here are, feeling the effects of COVID. A lot of the trading in the market is down as compared to the bullish uptick during the crisis when we were injecting capital via stimulus payments and all that stuff into not only economic stimulus payments for individuals that were being injected into the markets by people that generally dummies out there just trying to make a buck because they think all of a sudden they know that they understand how trading and investing works, and they don't. So they're basically exit liquidity. So the smart people capitalize on the fact that the dummies got money and they just took that money from them. And that has anytime it's not going to go up forever, even though that's what Michael Saylor says about Bitcoin. It's going up forever, Laura. That's the meme, right? Well, it doesn't ever go up forever, right? So we can see here that the GDP continues to decline, right? Yeah, it recovered from this area here, but it Q3 2022, maybe about almost half, or probably about half of the real GDP for Q4 in 2021. And then we're on this downtrend here for Q1 2023, and we'll see what Q2 2023 looks like and Q3, moving forward. But the bottom line is that you can see here that the debt ceiling just continues to rise, right? And so this issue, it suspends the debt limit at 31.4 trillion through January 1st, 2025. Okay. And what does that mean, right? Well, what it means is that if we continue on the same trajectory that we're on with real GDP, not doing as well as it had done in years past, but we continue to increase the the spending and therefore the national debt. I mean, this is a long-term problem where we're just leveraging more credit when we don't really have the same production value. And I mean, just on a personal level, like we talked about before, it's not a good look. So, I mean, that's just the basic overview that I have there. And we can have John, G-Force, and O'Breezy weigh in on that.
So I definitely agree. The whole kicking the can down the road. The problem that I'm seeing is showing each time with the debt limit, we keep getting to the 12th hour. And that, quite frankly, doesn't look good for our credit rating through the different bureaus or through the different companies. And it's going to shake investor confidence. Because eventually we're going to reach a point where there's a slip up. This wasn't even a resolution. This was just a continuation. This is more of a spending bill than a debt limit bill.
Yeah, I definitely agree. John, what do you think?
Yeah, I agree with that as well. The reason why Yellen gave June 1st as a X date, which actually got pushed back, so it's more flexible than she admitted at first, was that the tax revenues for 2022, which came in April of this year, was only at 68% of expectations. That's why everybody thought, we could have this debt ceiling debate at the end of this year, but it got moved up to June because of the U.S. only collecting 68% of what they expected. So that was a major issue that had to be addressed, and that's why everything got moved up to June 1st.
Yeah, 100%. I mean, and as O'Breezy said, and we've reported on, the bill is definitely more of a spending bill than it is a resolution to fix the debt problem. I mean, that's in fact what it is, right? Like the can is kicked down the road until 2025 to deal with it, and you have people like Rand Paul coming out saying, like, we're spending millions of dollars. Like if you listen to these talks that he or these speeches that he gives in Congress, it's just absurd, the stuff that he points out, where it's like, they're spending $1 million on some study to figure out, well, if we, tweak this aspect or that aspect, how much love does a person need in their life? It's like, dude, the disconnect from reality that the government has in terms of spending is absurd, where it's like we're spending money on things where it's like, well, I mean, we could be studying love for $1 million here, $5 million there, or we could be, actually making people's lives better in a practical sense, because that's the government's responsibility, So, reviewing some of these articles, you'll see that what the deal really does. It's tightening restrictions for SNAP. There's provisions for energy, for the COVID aid stuff, and IRS cuts, spending caps, and student loans. But it's a nothing burger in terms of actually fixing the problem. So being cognizant of this in the macro is essential to being a good trader and a good investor, and being able to actually determine. I mean, I think the biggest thing for an investor or trader to understand with this information is that, you know, you will be able to determine, right, the likelihood of the next bull run with information like this. I mean, you guys can correct me if I'm wrong, but I think that that's really the perspective that I'm coming at, why I pay attention to this type of thing, where it's like, you know, people tend to be like, oh yeah, we're in a, you know, bullish uptick, or things are looking good for this market. Well, if you look in the macro speaks differently. Like, same thing with housing that we reported on, or these economic conditions in Germany, right? The only way that, and I think O'Breezy is the one that said this like months ago, but you know, it's like the only way that we see another bull run in these types of economic conditions is if they turn the money printer on and start sending the stimmy checks again. You know what I mean? And then that will just be exit liquidity for the people that are in poverty, low middle class, and even upper middle class, for the people that know what they're doing. You know, they're just going to take that money and run. And then we'll be back in similar conditions again. And I don't think that this is very sustainable for markets in the long term, unless this problem gets fixed, but I don't see it. And I think we're just gonna have to stay tuned till 2025. If they do the same thing in 2025, I mean, I can't see how this is a sustainable outlook for the U.S. In the West in general, and the world really. So, John, do you want to move on to stocks?
Sure, I can do that. So this week, as I put in a daily dose yesterday, was pretty much a lot of sideways action. The S&P 500. There wasn't hardly any type of movement. As you can see, although on Friday we did have a 52-week high in S&P 500. So that is what everybody looks at, the headlines that everybody sees, and the conversation we just had with Pepe and Breezy was, well, that's not really what's going on in the economy itself and the global economy as well. So that 52-week high is the headlines. Everybody's looking at that. But this last week was a malaise. You can see, even though it's much higher, it's just trading flat at the very top. You can have a couple channel lines here and at the bottom as well, but at the top, this top channel is now going to be, before it was resistance, and now it's going to be support. So everything's looking up, everything's moving forward, but sideways and forward. A lot of people are going for the headlines and saying, okay, debt ceiling's resolved, everything's good. We hit a 52-week high. This coming week, though, we have early part of the week, we have CPI numbers out in the morning. Tomorrow we have PPI on Tuesday, and we have a Fed rate announcement on Wednesday. A lot of people are saying they're going to pause. This will be a pause. They're not going to raise interest rates again. A quarter point is still in play, but everybody thinks there's a pause. If there isn't a pause and they still raise it 25 basis points, then the market will go back down. Will go back down below the support line? I don't know, probably. But that interest rate decision that's coming out Wednesday morning.
Yeah, I mean, the news is it's going to be interesting this week, that's for sure. And the weeks coming after this, I think, you know, we might be on track for a bull run later on this year or early next year. But you know, the news is really going to dictate that, and I guess we'll just have to stay tuned and pay attention to the various elements that make up a bullish market.
Oh, cool. Great reporting there, and thanks for showing all that stuff on stage there. So with that done with the reports, I'm just going to have another quick Q&A session with those of you who just were on stage. So I'm going to invite you all back again and hand over to yourself, Christine, to go over some of the stuff for the FA and the stocks.
Yeah, so I did kind of have a question, but they went through everything so thoroughly with kind of the overview of it that, yeah, I just kind of looking at it, but you guys went through it really well with this, resolution package that they came out with. It's just merely suspending the debt limit without actually addressing, the underlying issues. But and just like you guys stated, it does potentially very much jeopardize long-term, consumer confidence and market stability. So you guys, I don't really have too many other questions. I kind of am on your side as far as we'll wait and see what happens, but it doesn't look good to wait till the last minute to try and come out with something that doesn't actually address the issue. So I'm curious, what happens behind the scenes there. What are they thinking? As far as, do they think everyone is so out of the loop that they're not going to recognize that this isn't really a solution? It's just prolonging it.
Yeah, I mean that's a good point though. The thing that I would say is that I don't mean to sound like a dick, but the average in like retail investor is not very smart, right? So it's going to get past the retail investors' awareness for like almost guaranteed, right? After a certain amount of time, and they'll read the headlines, be like, "Oh, the debt ceiling's resolved." Well, the debt ceiling's not really resolved, and people like us and people that are smarter than us because they have more resources and they they have the funds to make better decisions, right? For the most part, big funds and things like that, they totally understand everything that we're talking about, right? And probably even more so because they have in-depth analysts that are running things every single day to make better decisions. So when and if they did create another stimulus check situation where they just print the money in the case that the economy is taking a hit, it's just going to be exit liquidity. And even if that doesn't happen, if things are more sustainable, the fact that people don't, the average retail investor doesn't understand the macro markets to the way that we do, or the way that they should as individuals, they're going to make worse decisions and they're going to be exit liquidity. And the issue's most likely still not going to be resolved in 2025. It'll be another kick the can down the road situation. And how many more times can we go through that before things really just hit like a total or extreme economic collapse is my assessment. So, John,
Yeah,
I know Breezy, I don't know what they think, but
yeah, I was going to say, every time I see something like this, I just kind of wait to see what they're going to come out with to distract, everybody's attention.
right.
To the point where that's what I'm kind of curious about. It's like, what can we now come out with after this has been, put out, what we did, to where we can distract the normal population and this gets swept under the rug and, nobody's going to notice, type of thing. And if they do notice, what's their reaction going to be? Are they going to pump out more stimmy checks for all of us? I kind of said that in the Discord the other day. I was kind of like, well, they'll probably just, drop some checks to everybody and everybody's going to be like, okay, it's fine, move along. But those are the two things that I kind of wonder about when I see this come out, is what are they going to do to distract, the normal population that isn't as aware and looking into this. What are they going to come up with? What are they scheming behind the scenes in a way to distract everybody from, the actual big issue that is just going to come back up again?
They're going to follow the Roman Caesar's playbook for distracting the populace. 100 days of gladiator games.
Yeah. And the recent gladiator games was the news about aliens coming out, which, I mean, that's been slowly getting trickled out. It was getting trickled out prior to and during COVID, but now that's like a big talking point, and it's becoming more prevalent in the media from what I've seen. It's still not necessarily mainstream, but that's a nice way to shock the people into paying attention to things that don't really matter. And it doesn't really matter because even according to the whistleblowers that are coming out that are credible, because the government is verifying the credibility of the whistleblowers' information and protecting them under the whistleblower statutes. This has been going on for like a century at least, right? So it's like, is it really that, or is it important to focus on the things that affect the day-to-day of the average individual in the world currently? And that's where, assessments like this to parse through the importance of what you really should be focused on versus, okay, that's good to know, but that's not really going to help me in my day-to-day and function as a good citizen of the world.
Yeah, I thought the aliens thing was, kind of laughable in a way. I was like, oh, that's what they came up with.
Yeah.
It's like, if that one doesn't stick and they don't get traction, what are they going to come up with next? So I agree.
Yeah.
It's definitely interesting to see, but, like G4 said, it's going to be, we'll see what they come out with next.
Yeah.
They have a whole think tank for that.
Yeah.
They certainly do.
I'd say the one thing that the government's good at is being responsible, making sure that they always have a DD, and in this case, it would be designated distraction.
Yeah, for sure. 100%. They always have some at the ready, So
Well, thank you guys so much for discussing that a little bit further and just kind of, putting it out there so people can kind of, listen and kind of hear in and, be ready and not be taken for what is that phrase? Not all the blinds can come off.
Awesome. Thank you again for that, Christine. Thank you, Pepe, Obrizi, and GeForce.